right, ladies and gentlemen, boys and girls, as always, this is a fun Monday. The Mondays always seem to be super fun. At least it seems like this is a buyable event. Now, when the US debt gets downgraded, you just buy stocks and hold on. So we're doing fantastically there. As always, too, this is your guys' time, right? So this is your time to ask about sectors, tickers, crypto, stocks, Forex, whatever you want. And as a technical analyst, I'll take a look at them. So just to introduce myself, my name is Michael Nauss from statsedtrading.com. I'm a quantitative slash systematic trader. Essentially just means I backtest strategies. I come up with things that I can put my figure on and say, yes, there is edge if you trade in XYZ fashion. And then I trade in that fashion using scans and technical analysis, all that kind of stuff. So if you want to take a look at that, go right ahead. Now, what I'm about to share with you is not a spicy take anymore, but was a really spicy take I had over the weekend. And that was just looking back at the last few times that we had these downgrades. So let's go and take a look. Actually, the other times it was much worse. So we had downgraded right here at a, right here at August 2023, we were downgraded. So this was about the end of the last bear market. When we had gotten all the way up to this high, this was one of those guys downgrading the US debt. And then you can see we fell off and then right back through. And then if we go back to 2011, the debt was downgraded again. So just to show you that there's nothing new under the sun. This is no different. This is not new at all. And that we are, doing just fine. So we had this nice little right here. Zoom in a little bit. Fell for another couple days after they downgraded the debt. That was near the bottom, and we made new highs. So this was my I put out this tweet just telling everyone to calm down, right? This had happened before. And both times, at least before, it was short-term bearish, but long-term bullish. But it looks like we're not even getting that short-term bearish. We came off the open, and the strength of this action, if we go into a 2-minute chart, I don't know what that seems like, it's a bad tick or something, but I don't know. This is very much, if you want to see what a buy program looks like on the market, it's just like this, right? No down ticks at all. Every time we push down at all, we buy and we push down and we buy some more, we push down, we buy some more, so on and so forth, all the way up, right? So as we push higher and higher and higher, you can just see everything, and everything's getting bought up until about this period. This is, I'd say, when that buy program is kind of flipped off. So when I say buy program, what do I mean? You got to remember the big guys. They don't buy and sell in one lot like we do. That's a massive advantage we have over large institutions. If I want to buy, I can hit the button, I can buy. Most things are liquid enough that I can get in and out of without any problem. If I'm a hedge fund, large institution, bank, something like that, and I want to fill an order, I can't do that. I have to use algorithmic trading. I have to use systematic trading. And they do that by saying, okay, today I want to buy. And then they kind of turn up or down the aggressiveness of buy programs. So sometimes they're VWAP buy programs, which is like every time it comes back to VWAP, around VWAP buy some. There are, the more aggressive buy programs are just like what you see here, which is on every downtick, buy on every downtick. Just I need in this right now. And what I think is happening overall is this positioning data. I talked about this a little bit on Friday with Jordan and Leah. Definitely tune out there as well. But cut data, is it one of these? Yeah, right here. So this is commitment of traders data. So essentially what commitment of trader data is just saying that you have to disclose whether or not you are long or short in the futures market if you are over a certain size. And then through just like simple mathematics, you can decide, if it's a big speculator or a small speculator, that kind of thing. So what we're trying to do is we're trying to always track what the speculators are doing, because they're quite often wrong. It's the commercial hedgers, it's those people who are generally right. You can see, so just a perfect example right here is that everybody was very long the market right here, and you can see they are still flat to short the market as of Sunday's print. So if you are flat, the market, and the market is just ripping, then as a large institution, you are going to be buying on every downtick. I think that's what's happening here. And that's why we're getting such an insanely aggressive move, is because the big guys are underpositioned. They don't own enough, and they have to continue to buy and to push this thing higher. So that's what I think is happening. That's why I think we're getting this every downtick just bought over and over and over again. Um, and I think it will remain that way until you start to see this line tick up again. Until you start to see people getting long enough, that will likely be a short term top. But until then, everybody is dramatically underpositioned. And we're seeing that by just having the market move higher each and every day. So that's what I think is happening here. So I would not be betting against this market on any stretch of the imagination. The only thing that has me slightly worried is we got a bunch of Fed dudes talking today. We have a bunch of Fed dudes talking at 1 Eastern. So right when I'm off, Logan and Kashkari. And then tomorrow, look at all these guys. Right? Barkin, Bosick, Collins, like just tons and tons. Like 6 or 7 Fed dudes talk tomorrow. So that's the only thing I think that could kind of screw us up if the Fed guys start talking. I don't know what these bad ticks are, but that's super interesting what's going on there. That's what's happening. That's what I think is happening. Is no one cares about any downgrade or anything like this. They're just saying market downtick, good chance to buy. Let me get in. YOLO the thing higher over and over and over again. So that's kind of my rant. The only other thing that happened that was of interest recently is this Bitcoin kind of pump and dump, little rug pull thing. So there was a bunch liquidated on this move down. If we go in and look like an hourly chart, looked like we were going to take highs a day, looked really great. Happened on a Sunday, which is something that's very common to have happen. And then we just kind of completely fell apart. And then now we're slowly starting to rebound. This looks like it's following the market more than anything, this last little move, but it could mean that anybody shorted on this well, somebody definitely had to sell or short to make this move push lower. That person's very likely wrong, may have to turn and cover and potentially push long here. And if we finally break out of this high, then it's, through 110 and then maybe 120 or on the crypto side of things. So that's my rant. Now we'll get into your guys' tickers. Again, make sure you put them all there. I will get to every single one, at least until 2 or 1, sorry, Eastern, when is the end of my time. So LQDT, saying I sold last week. Am I still holding? I am still holding. And the reason I'm still holding is because my systems, you can see the line, the purple line moved, and I've got an alert set again. So I think the original purchase was like somewhere in this area. So we're about flat on the trade. And my algorithm, my system basically said sell this morning, but that right here to buy back in. So it reappeared on this mean reversion setup. So I looked at it and said, well, I'm up a little bit on that as well. So I'm just going to keep it and pretend it's the new trade as opposed to selling it here for pennies, near nothing. I think I haven't even opened up my swing trading broker, but I'm either up a little bit or down a little bit on it. Nothing that's consequential at all. So I'm like, okay, instead of doing that and then maybe buying it lower, I'm just going to hold on to it with the new stop and just make it part of the new trade. So still looking for a little bit of a mean reversion to happen here from this guy as well. Again, purely systematic, right? Like I just released a video on my YouTube channel about space that I bought some of just right here at this pink line or purple line. Again, I'm borderline 100% systematic. I'd say I'm 90% systematic, in which I have an account, a small account, which I take my discretionary trades. Most of my money is just happening in these systematic things, which just means I'm using algorithms, statistics to get into my trades. GameStop here. So GameStop's going to move with crypto now, right? The dude you're basically, if you're buying GameStop, you are paying an insane premium on a company that doesn't do very well to get exposure to crypto. Up to you if you want to do that, but Once they enter that realm, like MicroStrategy and all these guys did, once they get into this particular realm, it's simply a Bitcoin play. So now you're to the whims of Bitcoin. If Bitcoin moves higher, then great. If it doesn't, then fine. It's just been kind of put into that basket, and we're seeing more and more small cap and what is it? KAAS. I saw it today. KASS. There was one stock today. Someone will tell me that got into the same game where they said they're going to buy they're going to just buy and hold Bitcoin as part of their trade, which again makes absolutely no sense to me. Just open up a broker and buy Bitcoin or buy one of the ETFs and pay way less. Uh, GME is trading for like two times the price of what it is they have in cash. So you're saying Ryan Cohn is going to be such a great investor that instead of giving him $100 to invest, I'm going to give him $200. And when he doubles my money, then I'll get my money back. And again, it just seems weird, but technically it's just stuck in the middle of this range. And I don't even think it makes sense to do analysis on this anymore. You do your analysis right on crypto. Because again, if Bitcoin pops, then you're going to get a good trade here. And if Bitcoin doesn't drop, then or if it doesn't pop and sells off, then you're going to get a bit of a hard time, right? Because they are not making a lot of money by any stretch of the imagination here. So it's kind of like the Bitcoin miners, right? In my opinion, those things are dead, like Amara or whatever, because they're just playing the same game now. Everyone's just playing the same game as MicroStrategy. They've seen him take a failing company from the depths with Bitcoin. They're trying to do the same thing. ASTS, the strength of this in the long run is always really, really surprising and really, really interesting to me, right? The fact that you can't kill it, and I think that's a really good. Uh, it seems basic to be honest. It seems very basic, but if a stock rallies 1,800% and then you can't bring it back down over months, that to me builds a really good base for a potential higher move. The psychology and the reasoning behind that is we see stocks like this go from $2 to $10 all the time. And 9 times out of 10, they come right back down, right? If you're holding like a penny stock and that's gone from like a buck to $10 and you don't take profits, you're likely insane because 9 times out of 10, they reverse all the way back down over and over and over again. You can see it with these stocks. So when they don't, that's interesting, right? If you, one of the main tenets of like a technical analysis is you're looking at what usually happens, and if that thing that usually happens doesn't happen, then you really perk up. This is why people, if you've studied technical analysis at all, you've heard of like divergences and things like that. The reason that divergences are super interesting is because it's one of those things that it's not supposed to happen. Like in momentum divergence, essentially means the stock goes up, but the momentum doesn't. That's interesting because it's not what's supposed to happen. This is a perfect chart to me of what is not supposed to happen, which you're supposed to get these massive surges higher and then a completely huge reversal all the way back down. It's generally what happens when you have these things. So the fact that it's up and it's holding, that gets really interesting to say, yes, this is potentially a stock that is now, uh, this is its new price. It's not worth $1 anymore. It's worth 20, 30, $40. So that means if it breaks out and starts to continue based off of some fundamental thing that happens, even some sort of sentiment shift, then to me that's a viable event, right? I really like this chart, even though I very don't know much about the company at all, like other than launching satellites, right? That's all I know with the company. But yeah, I always like to look at this. This is actually what got me to be a crypto bull, was that the fact that I was around during 2008 and they couldn't kill Bitcoin. And then there was another crash and they couldn't kill Bitcoin. And it was just one of those, I became a bull because they couldn't kill it. it just couldn't go down. So eventually, if you can't kill a stock, it ends up being a good investment, right? ANVS. I'm going to be going in order here, just FYI. So if you're posting, again, I'm seeing it, but it's just I go in order, top to bottom. I give my own little rant to give people a chance to catch up, and then I just do it in order there. So this is one of those. It's a perfect example of always dies, right? You have big up move, and then it falls back down, and then big up move, and it falls back down. A huge up move, and then it falls back down, right? This is more what happens to these stocks kind of on their way to potentially zero, right? So this is kind of looking like a potential inverse head and shoulders here. And right, how you play a head and shoulders is you take a look at the neckline, which is around $2, and you say, okay, if it breaks out of the neckline, that's the buy, and then the stop loss would be here. That's a huge, that's like 100 or a 50% risk. That's pretty worrisome, right? That's a big risk, so you're gonna have to size it accordingly. But if you're right and the thing goes to try to challenge the gap, that's $4. So that's kind of interesting. But this is a play at this point 100% on whatever it is they have in the pipeline. It just says it's a bio company, so it means they have something in the pipeline. That's the bet that you're taking when you're taking one of these bios, is that this is potentially found a low, but that whatever they're going to do is going to rocket this thing higher pretty quickly because it's burning cash, right? And anytime you see something, especially in an environment where interest rates are so high, that is just nuking cash, that gets you worried, right? 40 cents per share loss, right? They are burning through cash. So the two things you got to ask yourself is, what is their cash burn? And do they have enough to get through whatever potential drug you think is going to save them? Because this isn't generally a company that just gets turned around for something, right? You need to take a bet, and you need to know when those approvals are going to start to roll out and when they can start to make money, because this burning of cash that they're doing every single day is not something that they can keep going forever in this, especially in this environment, right? It's a different environment. We got a foreign stock. What's BIP? Can I just do .un? Oh, Canadian Brookfield Infrastructure Partners LP. That's an interesting look. This is a very long period of time to do absolutely nothing. So the fact that this is an LP means that it's not going to move crazily. So you don't have to take a massive bet here at all. This to me seems like one of those ones that, like, I'm looking at the price action right here where it did the same thing at 22. If you had just bought the breakout and avoided it until then, you had this nice move to almost 40 or 35. That's a great percentage return on something paying you a fat dividend all along the way. So I would kind of do the same thing, is right. If we're able to break this $50 high, that's a good look. A simple stop loss would be if it gets back to, this is the tantrum, it's Canadian stock. So, we are kind of linked to the US in that way. If it gets back under this 36, time to go. So I think that's kind of your game plan, and you're getting paid a nice dividend along the way. So it looks good to me. This is what you want to see, though, right? It's $50 area has been a huge resistance for that zone, so you do want to see it break through $50 there. LASE. Laser Photonics Corporation. Fancy. In a downtrend below its 50-day moving average, which is pointing lower, there's really nothing super bullish that I see here at all. It has earnings, tonight? 19th. Yeah. So it has earnings today. So be very careful with something like this that has earnings today. That is not, again, burning money. Burning money is fine to do when interest rates are zero, not so fine when it's not zero. So, what you're looking for is something to change this trend, right? It had a push early on, and then it's just been bleeding. These are one of the ones that I talked about earlier that I'm excited that ASTS is not doing, because ASTS, they did this pop, right, all the way up to $18-20, and then it held on forever. It did something like this, right? Whereas this one's just tanking entirely. So I'm not as excited about something like this. A very clear area here is kind of this 325. Maybe if it gets above that with some momentum, you can take a shot. The lows are sitting right here at 2 something, but the trend is not with you here, right? Every time it's bounced recently, it's just gotten clobbered over. And this is a very long time between earnings, which makes me think they like suspended earnings or something in the meantime, which is obviously not a good thing. You don't want to have companies suspend earnings. So yeah, just tank, 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 tank. So again, trend is everything, right? So be careful about that. Eric, who's Eric? ERIC. Hey, Eric. What does Eric do? Electronic technology. This is like a utility. Looks like a utility. This is another great looking chart, just like that BIP, right? It's hanging. It's got a very clear level of resistance. These are the areas that I like, that you don't need to be a CMT or someone who does like fancy head and shoulders, bat pattern, that kind of stuff. The best trades are the ones you don't need to be a genius to see, right? This thing is a strong company that looks like it's going to break out. If you just like click on the earnings, they're probably making a bunch of money, which they are, right? A 78% earnings surprise. That happened, I think, right here. So you had that massive gap up because of it. And now it's just hanging out near highs here. So this one looks fantastic to me, right? It looks like it's primed for a breakout. I would say these unfilled gaps here are what you have to watch. If it starts to trade back into that gap, maybe you exit and then come back in when it hits new highs. But you know, you have it looks like it's breaking out today even. So when it breaks out, that looks good, especially in this market that uh, hasn't quite broken out. You've got some relative strength going on here in these actual names as well. All right, RCAT. I like all of the interaction. I tell you, it makes this much more interesting as someone who's got I've always got my iPad sitting right here. If you see me look down, I'm probably just doodling a ticker to put in. So I really appreciate this. So this Red Cat Holdings is something that's very interesting too, where it's got a clear area here at 460 where it's bounced now twice. So this is another one, right? That has gone from 65 cents up to $15, but then they couldn't kill it. So it's just been kind of basing in here as well. And the fact that they can't kill it, that makes it very interesting to me, where right now you're breaking out of this trend line. So you can look at this and say you've got this little triangle going on where it came down, bounced, higher low, bounced, and now it looks like it's going to break out. So quite easily or quite quickly, you want to see a breakthrough 730 or 750. If you can get through 750 on the quick, then I think you can go to 13 or maybe you challenge all-time highs, and that's a double, right? If this thing challenges all-time highs, if you ever see it below this price right here where buyers came in twice, then you got to go. And more than anything, that's what I want for my trades. I want to be able to draw out something knowing that no one knows anything and we're all just speculating, and do something like this where, if I'm getting involved, if we're breaking above here and I put a stop loss at this low where it happened before and we get to all-time highs, that's 3 times my risk. So if you're risking 1,000, you're going to make 3. If you're risking 10,000, you'll make 30, whatever it is. That's all just size of your account stuff. That doesn't really matter. So if RCAT can get going through that resistance zone, that's 3 times your risk. So then now all you have to do is basic probabilities in your head. Do you think it's a 50-50 shot that it's going to do that? If so, that's a positive EV bet. And positive EV bets are what we take all day long, over and over and over again. If you can take a positive EV bet, then good. Baba. There was some news coming out of China today that they were going to lower interest rates. So that's a super interesting idea there on BABA. So full disclosure, I own a bunch of China from kind of inside this area right here. After they did their first spike and they came down, I got involved and I got back out and I got back in. I'm bullish just China as a whole. And the reason for that is just I think I like to buy things that everybody hates, and everybody hates China right now. No, I should clarify. I like to buy things that everybody hates that don't go down. That's what I like to buy. I don't want to buy something that everyone hates, like a meme stock, if the meme stock is selling off. That doesn't make any sense, right? I want to show me a stock that everybody hates, but stops going down for an extended period of time. That's where I'm very interested. That's where I'm potentially going to put some money into. And that's what China was for the longest time, kind of right in this area. Everyone hated it, but it just couldn't go lower. So I like the look of this one, especially because it's moving here today. The news came out that they're going to lower interest rates happened a little bit faster, I think, than normal. So this area I have highlighted, you can see why I've highlighted. If you go back, it's resistance, it's support back here, and then it's resistance here and here and here. So this 120-ish is a very important area for BABA. We're fighting with that right now. So a trade for me would be very simple. I want to buy it as it kind of goes back through 125 and then use this kind of recent 115 or so as a stop loss, right? Just let them prove it to you, because it's China. Any anything bad can happen there. And that's kind of the other thing that I'll say with trading Chinese equities is all of the trading happens over there. That's why you see all of the crazy gaps in the chart. So you are sleeping while all of the news is taking place. And if you're awake, not like you can trade it anyway, unless you got one of those 24-hour brokers and there's enough liquidity that you're not getting hammered. So trade them knowing that. Trade them knowing that a couple percent gap is small. If you walk in and your Chinese equity is only gapping up down or 1%, that's small, right? You generally want to see more, right? You want to see a higher activity than that. So again, just be cognizant of that. I just trade them as if they're kind of biotechs, right? And they have more extended risk. Pepsi's one that I believe that it's selling off more than anything because there is certainty in it. There's certainty in the market. This to me is an ugly kind of rounded top here. I think the question that everyone has when it comes to names like this is that what is RFK? Robert? I'm not American. I don't know any of these people, but RFK is the guy who's going to come out and ban all of these things, right? If that happens, who is more or less exposed? And what I don't like is that Coca-Cola is doing just fine. And so Coca-Cola's on the up, Pepsi's on the down. Generally speaking, these things are insanely tightly correlated. If you have Coca-Cola going up, you have Pepsi going up, right? If you have Pepsi going down, you have Coca-Cola. Generally, like you go back in time, these things are super tightly correlated. The fact that they're breaking like this tells me that investors are way less excited about what's happening from Pepsi than from Coke. So what that means is that if there is a positive shock for the beverage industry, Pepsi will probably underperform. And if there's a negative shock for the beverage industry, then Pepsi's probably going to be the one that gets killed. So that's just relative strength, relative weakness. You can look up, there's tons of academic white papers showing the legitimacy of buying things that are relatively strong and then selling things that are relatively weak versus vice versa. So Con L. This is just Coinbase. So I really like this company, and full disclosure, I own a bunch of this company. I think that there are ways to get good exposure to crypto and ways to get bad exposure to crypto, in my opinion. So the ways to get good exposure to crypto is by owning companies that have a connection to crypto but are profitable, like a Coinbase, right? I don't think I think the market's already shrugged off the effect of the broken, um, the hacked, they hacked into or social engineered or however into like 1% of all accounts. So I think we don't care about that anymore. So I think it's up and up from here. You can see I drew out in the long term. This is very kind of cup and handle look. You get the cup right here, and then you get the handle kind of right in this area. Very, very, very strong cup and handle look that is now broken out right in this area. So I really, really like this. Caveat being, you are tied to Bitcoin. Right. So you mentioned Connell options. Well, if Bitcoin doesn't stick the landing here, even if it takes a while, right? It takes, well, past June to break out, you're probably not getting much movement in Coinbase. So you just have to keep that in mind that when you deal with options, you not only, this is why I don't trade options very much at all, is because you not only have to be right on direction, you have to also be right on time. And those two things combined make for a really hard life when it comes to trading. It's a really hard life. Yeah, because direction and time, both those things you have to hit kind of in the same way. And again, I don't see it. So if, however, you get this breakout in Bitcoin, you're going to have Coinbase kind of rocket with me, with it. That's why I zoomed out so far on Coinbase, because it's a long-term play for me, right? I own a bunch from, around the 200s, and my stop's like 130 down here, right? There's a long-term play. I want it to break all-time highs and continue, but that could take months or years or even longer. So again, keep that in mind. KURL is a crypto. There's no KULR that I can see for crypto. There isn't this one, but is it a crypto miner? Maybe that's what you mean. It's like a crypto security. You see, I already have this downtrend line draw because if it broke that and just failed miserably, this kind of looks like, what was it, the RCAT the other day. You have a level to play off of, right? Another one of those that they rallied and haven't been able to kill yet. So I think your level to play off of is $1. If it goes below $1, it's probably time to go. The dollar, that dollar is not just important. I don't like that it's losing money. The dollar isn't just important because it bounced there a couple times. The $1 mark on stocks is very important because if you lose that, you have to do some funny financial engineering or you get kicked off the exchange. So when you see a stock near $1, you want something that is propelling away from $1 very quickly, because then it's kind of like, okay, they're going to reclaim compliance. Like one thing that came through my scan today is this FTech. Right? You can see it spent a lot of time under this dollar, and that's worrisome because if it spends too much time under $1, they get kicked off the exchange. They go home, right? You either do a reverse split, right, do some funny business with your books, or get off the exchange. And that's obviously not what you want to see. So when you see something like this propel away from $1 pretty rapidly, and so far, it's still only early in the day, but is holding on to these gains, that to me is very encouraging, because what you're going to have happen if it pulls away from the dollar is anybody who was short or sold because they had this fear of delisting, those people have to cover their position, or if anyone sold because they were worried about delisting, they may buy back, and that could propel it even higher. So yeah, $1 on is significant, again, not because of just an arbitrary reason, because it's psychological or something like that. $1 is hugely important because if you lose $1, you're out. So this is why you quite often, if you zoom back on some charts, I can't think of one yet, but maybe chat will know. But you can zoom back on some charts that have what, ASST. Is this one? God, if it is my memory. No, it's not that bad on this one. But you can sometimes go zoom back on charts and they're worth like millions of dollars. Space, just the one I just bought one of Space earlier today. Yeah, if you zoom back to Space here, this was never worth $1,000 a share. What happens is, as they sell off, they have to reverse split. As they sell off, they have to reverse split, right? Just the way they stay into the game. And you can see the stock split that happened right here, right? A 1-for-20 stock split. And quite often these things are like the kiss of death because it's basically saying, I don't have a way to stay listed on the stock exchange. I can't stay listed. So what I need to do is I need to do all this funny business in order to get listed, and it just doesn't. It's not the vote of confidence you want to see. So when it comes to some of this KURL, it's the same thing, right? If it can stay over a buck, I think you can take a shot if you like it for whatever fundamental reason you like it for. But just be very careful of that dollar because below that dollar, you have to do reverse splits. You have to do all kinds of stuff to stay listed. I didn't even check to see if this one. No, this one's not. You gotta do all those games, and you just don't want those because again, generally speaking, kiss of death if you have to start playing games in order to stay listed on the stock exchange. CEP. Cantor Equity Partners Finance. This is one of those Bitcoin ones. Yeah. So this is one of those that they decide they're going to hold crypto. And again, to me, maybe I'm wrong. And again, I'm reading chat. So if someone in chat wants to correct me, why not? Why would I hold a junk penny stock that says they're going to buy Bitcoin? Why is that bullish when I can just buy the Bitcoin? MicroStrategy, I almost get because he's doing like leveraged junk, but I still don't. But then you're also getting the risk of MicroStrategy's wallet gets hacked or something like that. It just doesn't make any sense to me, right? Just buy the Bitcoin. Like if you're buying a company because you're bullish on Bitcoin, this seems to me, and this happens all the time with these kind of junky penny stocks. In 2018, it was the word blockchain. Right? I remember, if anyone remembers, let me know. Long Island blockchain, and Long Island blockchain was the Long Island iced tea company, and they changed their name to Long Island blockchain, and the stock like quintupled that day. It did something crazy. It's gone now. But their whole shtick was they said, "Oh, we are going to use the blockchain to help with logistics of selling iced tea," which right makes as much sense me saying it as you guys hearing it, which is none. And but it was this whole thing of everybody wants to buy anything that had anything to do with blockchain at the time, so it rocketed and then fell apart entirely. Right, so this seems like one of those same kind of thing, same type of thing, where people are just saying, "Oh yeah, I'm going to buy Bitcoin too," and it rockets. They saw it happen with MicroStrategy, then GameStop got involved, and now all these little junky names. But you're losing money, so you're buying an asset that's just like degrading slowly over time. That you'll have to either issue new shares or new debt or something in order to stay alive. And I think MicroStrategy is a Ponzi scheme too. But that's something I'm going to rant about later. So these ones really scare me. If you're looking at Move, someone's saying Move. That's the Move index. So this is bond volatility. So all this is telling us is that the bond volatility is decreasing ever since the what are we calling it? The tantrum, the tariff tantrum, I think is the famous thing that I like, or the word that I like the best. So this tariff tantrum thing is just kind of it's just falling apart entirely here. So yeah, it's just so I'm not super interested in doing much analysis on this. I don't like doing analysis, just like I don't like doing people that do technical analysis on the VIX kind of trigger me, just because the VIX is not something that is really derives its value from people trading. The VIX derives its value from people buying or not buying put options on the SP 500. That's the whole reason that it moves. So again, doing technical analysis on the VIX makes no sense to me, right? What makes sense to me is you take a look at the SPY, which is the market itself. And if the SPY is going higher, generally the VIX is going to be melting down. If the SPY is going lower, generally the market is going to be not melting down. It looks like we are about to turn positive on the SP 500, which is hilarious. So if there's anyone out there who trades news, this should be your shining beacon that news doesn't matter. The entire US debt got downgraded, and we are going to go positive on the day. And some people are like, oh, that makes sense. So yeah, it's one of those things where, you know, makes no sense to me to do analysis on those. People sometimes will use it. It's like I talked about earlier. If it's doing something unusual, say bonds are going up, but also the move index is going up, then yeah, you know, those options on bonds might be pricing in something. But if it's moving, if it makes perfect sense, in which case, like look at this and then look at the VIX. If it makes perfect sense, then I'm not interested in it. Right? This is just a mirror chart of the VIX. The SPY's going up, so the VIX is going down. So yeah, I just don't like to do a lot of analysis on those. Rocket, thank you, man. I really appreciate your knowledge that you look at stocks for me. Oh, thanks, man. I like being here. Again, I've got some. If you see me look down like this, I'm probably making notes on my iPad of things that I'm interested in. Rocket Lab fits into the same world as ASTS does for me, right? They can't kill it. That tells me that space, robotics, this type of thing is the next AI. Not maybe in the sense of magnitude, but the market goes through themes, and it goes through themes regularly. It goes through, right? It's everyone's interested in weed. That was way back in the day. Now nobody cares about weed, and weed's a horrible investment. And then people cared about blockchain, and blockchain was great, and then no one cared, and it was a horrible investment. And then everyone cared about AI, and then so on. And it's always a thing. There's always a theme going on. I really think kind of space and robotics is going to potentially be the next theme. I've also been betting that psychedelics is going to be the next theme as well. I've not been right on that bet, but the problem is when it comes to, like, you know, if you were to say, well, ASTAS over Rocket Lab, that becomes really hard to do because it's very bad because these themes generally take years to play out. The annoying thing, the most annoying thing on these ideas or on these themes is if you are right on the theme, but then wrong on the instrument to trade that theme. So if you are right, let's just use psychedelics. Say you're right that psychedelics is going to be the next way that we deal with depression, anxiety, whatever. But then you pick one stock, and that stock, they fail a trial. The management is inept and they're losing a bunch of money. That becomes really hard. So what I would say, if you're kind of debating, if you're like me and you think that space is going to be a next theme, either find a thematic ETF that has the holdings that make sense to you, and or just buy a bunch of, right? If you've got 50 grand you want to put into the space theme because you think it's going to be a good thing, maybe pick 5 stocks and you put 10 grand into each of them. Because if you're right and the theme works, the odds are they're all going to do well. Some are going to do better, some are going to do worse, but they're all going to do well. It protects you against, you know, this one company really sucking and then the rest of them doing great, which again is very annoying if you again get the theme right, but you get the individual equity wrong, and then it's just it's obnoxious, right? It's I think it's a really bad thing. So. What are my thoughts on gold miners? Well, full disclosure, I am in GDXD, which is a short. inverse short on gold miners. I'm not doing well on it. I'm at $4. It's at 448. It's not a great trade. The the reason that I'm bearish on gold miners is because I'm thinking gold may have gone up a little bit too much. Nothing crazy, nothing wild, but it might be a little bit over its skis right here. And then I look at it and I say, okay, let's put this chart into our memory for a second, and let's go to GDX. Doesn't look as good, right? So the gold miners are lagging the actual commodity itself. So if I'm going to bet against something, it makes sense to bet against the thing that's lagging and not bet against the thing that's leading. That's just one of my tenets of trading. Is a lot of things I do look for relative strength. Give me the strongest names out there. So if I'm going to bet short, I'm going to bet on the shortest or the ones that's not going up. So hasn't gone the way I thought, and if gold moves higher, then it won't. Right? If gold digs in here, this blue line I just have is a 50-day moving average. It's for one of the systems I use. I need the 50-day moving average on because I sell below the 50-day moving average. It's just a general. Brian Shannon taught me this. It's like a general health of the stock or the market. If you're above that and it's pointing higher, it's probably pretty healthy. The fact that we've hit it and then we've bounced off it, and even today, in which the market is recovering dramatically, gold is recovering as well. Like you can see, the candle so far is a slight dip in gold in the morning and then pushing higher. Even when the S&P 500, I think flipped. I'm trying to look. I think flipped green for just a quick second. Let's go here. No, let's go here. Yeah, not now, but I thought we flipped green for just a quick second. Yeah, the fact that it's not selling off with the market going green probably makes me think I'm wrong and I should be bullish gold and bullish GDX. It's just a little fade trade, and a fade trade I'm wrong on. So I just want to tell you, hey, I'm not reading that stock correctly. So Bull's gonna have the same. Webull is gonna have the same thing when it comes to Robinhood, Coinbase. It's going to be correlated to crypto and general degeneracy, right? Webull is one of those degen brokers. So I hear that they don't exist up in Canada, but I would say it's interesting to look at here. I would almost ignore this price action because this was one of those. We had just come off the Newsmax IPO, and Newsmax went nuts. So the fact that we had another IPO and that IPO also went nuts doesn't really, I don't put much credence in that happening. It just was one of those moments of passion, you could say, and it's all the way back down to where it IPO'd from. So I would almost, if I'm doing analysis on it, I would try to just cut this bit out, just because this was basically people went insane for a couple days. Now it's probably closer to a fair value, and now you can do some analysis from it. Really hard to do that kind of thing on IPOs. Quick one for when you get stocks that are crashing like this, you put a VWAP on the top. This is the average price of the average market participant if they were buying Webull at the worst possible time. And then you could maybe look for it to get above that over time as either price chops sideways or moves lower. This will start to catch up, and then if it breaks, maybe it's something to keep an eye on there as well. Positive EV bet was the question. What does EV bet mean? When I was explaining EV bet earlier, it just means expected value, right? So we are never trying to in the markets, and this comes from my being a quant, right? And being a systematic trader. I program things, I backtest things, a robot tells me to do things, and I do them. What you're looking for is edge in the market. You're looking for a positive, every trade should be a positive EV trade, which means there is nobody in the world who can predict what's going to happen next in any single stock. And if anyone does, they're lying to you, right? So what we're trying to do instead of that is we are trying to say something like, just think of if I took this trade 1,000 times, what would happen? And if I took the trade 1,000 times, would I make money? That's what you're looking to do. And there's two components of that. There is, what do I believe my probability of profits are? What do I believe that the chance that I am right? So I think I'm going to be right 55% of the time if I do this trade. And then how much am I going to make when I'm right versus lose when I'm wrong? So for example, I have some systems that make about the same amount when they're right as they lose when they're wrong. But their win rate is like 58%. So you're right 60% of the time. Uh, but when you're wrong, you lose a buck, and when you're right, you win a buck. Well, over time, that system is going to produce money. And then I also have systems that are only right 40% of the time, but you make $2 when you're right and you lose a dollar when you're wrong. That's another positive EV bet. So everything you're looking at, do that two-pronged calculation is what are my chances? And it's really hard to do this when you're a discretionary trader. As a systematic trader, I have like a 30-year back test for every trade that I ever put on. It becomes way easier to know what my odds are there. But just again, keep your data, try to ferret out roughly what your win rate is, and then how much you're going to make if you're right and how much you're going to lose if you're wrong. And if that number is positive, you got to take the trade. Just mathematically, you just have to take the trade. You have to take them over and over and over again, because again, we can never predict the outcome of any single. It's like a coin flip, right? You can never predict whether it's going to be heads or tails. If you think you can, you're delusional. But over time, you can predict that it's going to be roughly 50-50, roughly, because it has to get to like 100,000 before it's actually 50-50. But then in the meantime, what you're trying to do is you're trying to say, well, if I'm going to flip a coin and every time it hits heads, I'm going to make $2, and every time it's tails, I'm going to give you a buck, that's a positive EV game. If I'm going to flip a coin and it's going to be 1-for-1, that's going to be an equal EV game, right? So AAL, someone wants to look at AAL, American Airlines. Holding up actually better than the last time I looked at it. Last time I looked at it, I think it was down around here. This is a hard industry. These guys don't make money. There's like an old joke that if you want to be a millionaire, start as a billionaire and invest in airlines. It's a rough game, but this is a kind of nice looking potential cup and handle look. So for a short term trade, you've got this base here. So I think above, 1250, and then you could use this 50-day moving average as like a trailing stop. I like that. I think that looks nice. It's very hard for me to trade airlines because it's a tiny margin business that is just really, really hard to profit off of. Move is a stock, not the move index. Oh yeah, there is a stock move. I thought you were talking about the move index. Yeah, no, we'll just skip over that one. But they have FDA approved blood oxygen sensor that Apple wants. Maybe it's a heck of a bet. You're betting on solely that outcome without. I also like psychedelics, MindMed. Full disclosure, I am a MindMed holder from around $5, so I'm not up huge on it, but I bought it way back here on this breakout of $5. And I like them too. I like all the math from that. I like all the studies as well. Webull is in Canada now. Is it? Is it really? Webull, Canada. I'm gonna look into that later. It's interesting. I didn't think they were because we banned payment for order flow up here. So, broker, take a look at. Thanks, man. Keep going down the list here. Yeah, so I like the psychedelic industry. PSIL is one way to trade it. It's an actively managed psychedelics ETF. I nerd out sometimes and read these studies. I like the data that they're coming out with, that they are curing depression in like one. You come in, you trip out of your mind, and then you leave, and your depression's cured, not treated, like gone for 6 months to a year, and then you come back and you trip out again, and you go on your way. That seems amazing to me, right? We all, I'm sure, have been affected by somebody with depression, anxiety, these related things, and the current drugs we have suck. So if someone comes along and makes something that is just infinitely better and you only have to take once a year, that seems amazing, right? So I think that's good. Yeah, you mentioned the army. I think PTSD is another treatment for them as well. So I think as soon as I think there's two. I think MindMed and Cybin. Is it Cybin or Compass that are close on FDA trials? I like MindMed just because the chart's way better. They have a big cash position, which I think is helping them hold up. They've got cash until like 3 years from now, so that's going to help a little bit. But that's again, these are long term bets. And if I look at the chart on a weekly chart, this kind of looks very cup and handly to me. So there's my technician coming in, right? Big cup right here where it went all the way to $2, and now it's just kind of been hanging around and slowly kind of grinding lower. But any kind of good news pops it to 12, which is a double, and then maybe to 20, which is 4x, right? So again, these are I understand the bet I'm taking with these, right? Is that, if I'm right, it's a 10x. If I'm wrong, it goes to 0 kind of thing. CNVS. Oh, we're getting close to the end. Oh, good. Again, I appreciate you guys for giving me ideas like Rocket Labs and ASTS. I'm going to put on my watch list, maybe buy those later in the day. So yeah, I appreciate this. This CNVS. This is kind of looks the same. This cup and handle style look, right? Where you have this big right? I never want to buy stocks that are doing this and selling off, right? If anyone gives me a ticker and it's hitting new lows and it's in a downtrend, I'm not interested. But when you have something like this that puts in a nice big rounded bottom, the reason technicians like rounded bottoms, just insert your joke there right away, is just because it shows not a spike down in recovery, but a nice big kind of it's gone down for a bit, it's gone sideways for a bit, and now it's going up for a bit, and it just shows that there's been time to work through the trauma of this thing just tanking, and now it's holding. So that's what creates this cup and handle kind of look, right, where you have the cup right here and then potentially the handle right there. So that's why we like these looks, is because yes, this thing was in a downtrend, but then it went sideways for a while, and now it might be working on an uptrend. So yeah, this one looks good. If it can get through this handle, right, you could draw a trend line like this and it's already broken, or you could draw a trend line like that and maybe it's broken through there. So yeah, it's a nice look. So it looks like we have one or two more here. So let's do NVO. Novo Nordisk. So yeah, this is one of those that I'm not super interested. It's a nice base going on here that it broke out of way back in the day. So all of this just to retest the base. But if you zoom in on this guy, it's just been an unrelenting downtrend for a long time. This is one of those Ozempic type things. And I think the problem with these is that Ozempic became such a amazing thing for everybody that they all built Ozempic. So you have a company that came out with something amazing and revolutionary, and it may help the weight loss epidemic, and that's going to create a whole bunch of great health outcomes. I'm not an Ozempic hater. I actually think it's fantastic. But then the problem is, once one came out with one, they all started coming out with them. And then the market just gets completely flooded and saturated. Margins hit the toilet, and then you get these downtrends. So this would be one of those that for me to touch at all, I need, right, that bottoming that we talked about with the other one. I need to stop going down. I need to start going sideways and then start going back up again. And I'm the kind of guy who buys here and doesn't try to catch there. And then I'm totally okay with the fact that I always miss the lows from there. And I'm cool with that, right? It's just the way it goes. I'll always miss the bottom and I will always miss the top, because what I want to do is do something like this. I don't need to buy when it broke here. I can just buy when it breaks here, and then I can get out here and I'll be fine. Give me this little chunk over and over again, and I'm a happy camper at compounding, right? So all right, guys, that is my time. I don't want to keep anyone any longer. I appreciate you very much for coming by. As always, you can hit me up on StockTwits or Twitter. or just go to statsedgetrading.com, find out more of me there if you want any more questions. And if not, I will see you on Friday. And then again, probably, no, not next Monday, but I will see you guys on Friday.